Stop whatever it is that you're doing and watch this video. Today, I'm going to show you exactly how you trade a turtle suit inside of my mechanical turtle suit model. I am sick to death of people coming to me saying, I can't trade a turtle suit. How do you trade the top and the low of the day the entire time, X? It's wizardry, it's sorcery. Today, we're going to change that. We're going to do that by showing you my mechanical turtle suit model, which is complete and utterly repeatable. You can deploy this in your charts every single day, and it can be a one setup for life. The way that it works is it works off a high time frame change in state of delivery, and then we're going to go down onto the lower time frame to dial in our entries. I'll reiterate, you can deploy literally this one model for the entirety of your trading career, and that be it, and you'll find success. This episode is going to be from a live recording that I did inside of Red Pill University, which is my private educational company. If you find value or you have any questions, let me know in the comments, but also smash that like and subscribe button. But until then, guys, trade safe, trade smart, and I'll see you on the next episode. At the end of this video, I will also add, I've left you a little bonus for getting to the end. Bosh, take care. Okay, we're going to start off with some theory. This is just so everybody is singing off the same hymn sheet as we go into this model. First thing to understand is what a turtle soup is. A turtle soup is essentially a sweep of liquidity into a high time frame POI. So if we had price going up like this, and we had our higher time frame point of interest up here, whether this was a higher time frame order block, for example, this sweep of this external range liquidity into our higher time frame POI is your turtle soup. It's a manipulative move above external range liquidity. We would then be looking for price to distribute lower to take internal range liquidity. That would be a bearish turtle soup. A bullish turtle soup is the opposite. So it's where price is moving lower, and we're looking for price to sweep internal range liquidity into our higher time frame POI. Again, whether this was a rejection block, order block, whatever high time frame POI that you're utilizing, to then distribute higher to come and take out external range liquidity. This sweep of this internal range into our higher time frame POI would be a turtle soup. So that would be a bearish and a bullish turtle soup. The next thing we need to cover is what is a SMT. So if I just draw a line on my chart for a moment, and we're going to break these two. So what we're looking at is correlated pairs, and in the indexes I predominantly use NQ, and then on this side we have ES. SMT in the most basic form is when one will put in a higher high, so this turtle soup, and the other will fail to put in a new high. So this divergence between these indexes is SMT divergence, and we utilize this SMT divergence as part of our theory with my mechanical turtle soup model. The last piece of theory that we need to understand before we move into this is a change in the state of delivery. What happens here, and you can study this inside of YouTube, I've done a channel on it, it's called Protected Highs and Protected Lows. But essentially, once price goes into our higher time frame POI, so turtle suits into our higher time frame point of interest, and then breaks structure, this would be known as a boss, a break of structure. This here is our change in state of delivery. What we are looking to do in this model is utilize an hourly change in the state of delivery utilizing SMT and a turtle soup. And then we're going to go down onto our lower time frame. So inside of here on the M1 chart, which is the 1 minute chart, to find our turtle soup entry inside of here. So with that being said, let's jump into a live stream that I did recently, which breaks down some examples. Enjoy. What we're going to be looking for is on the hourly, we're going to be looking for the hourly to get into a higher time frame POI, whatever that higher time frame POI was on the daily. So up here, if you remember, we're looking at this volume imbalance, right up here, up on this hourly. You know that for me, I'll be trading aggressively off this high. However, if you miss that high, you don't trade this, you miss all of this, and you're thinking, okay, well, how can I get in this? This is where this becomes really, really great for a secondary entry turtle soup. So in essence, what we're now looking for is once we have hit our higher time frame POI on the hourly, we're going to wait for or look for the candle to break below the hourly low, which goes into that higher time frame point of interest. Okay. Once we do that, we have a change in the state of delivery on this higher time frame on the hourly. That's the first step. you're going to look for price to violate the low of that hourly that has gone into your higher time frame point of interest. Once that happens, you're going to look for SMT on the higher time frame on the hourly. You're going to look for SMT on the hourly between ES and NQ on this higher time frame. Once you have that, you have the higher time frame confluence that you're looking for. Once you do that, and you've got your change in the state of delivery and your SMT, you've got a higher time frame market maker sell program. Okay, what you're looking to do is once you have this violation, so once price has a change in the state of delivery, you're going to measure the width of that order block. Okay, you're going to measure the width of that order block. And then you're going to look for 50% to the low. And you're going to create a box in that range between 50% and the low. This is where you're going to be looking for your entries. So what we then do is we go back down onto our lower time frame. And this is stage 2. So that's all of stage 1. So stage 2 is now we're looking for our lower time frame SMT inside of here. So this is where you essentially frame your PDRAs. So if you go to this day, if you remember, I was going short in here. This is a breaker block. Turtle Soup into the breaker block. And then you have your SMT on the lower time frame. This is now a lower time frame sell. So this is where you'd start framing on your lower time frame SMT, and Turtle Soup combination, where you're looking for your lower time frame base rule triggers inside of here after that high time frame confluence. Final step, you're going to go back to the original manipulation and you're going to measure on the 5 minute. I'm going to give you a little bit of source. X level 2 projection, and you're going to go out to 2 times standard deviation. That becomes your target. Okay, so this is one example from this day. We can look at another example. So here, lower time frame point of interest, H1 to M5 model. Okay, price on the hourly going into our higher time frame point of interest. We're going to look for SMT to take place on the low. Okay, so if you go to your SMT chart and we flip this to the hourly, you're going to look for your SMT. Just a quick break, guys, to tell you about my book, a little shameless plug. This is the book I wrote last year. Super proud of it as it went to a #1 bestseller on Amazon. It's in its category. It's available on Amazon in paperback and Kindle format, and is 180 pages of pure source, if I don't say so myself. So yeah, if you want to get a more grounded knowledge of the futures market, the markets that you trade, it's a great little companion to have on your desk. So yeah, if you use the links below in my bio, you'll be able to find the link to Amazon to acquire yourself a book. If you find value, do let me know. It's good to hear your comments and thoughts. But until then, let's get back to the video, shall we? Right here. Right? Once price violates that hourly candle, violates this candle, so you're going to start looking for your entries. So I'm always going off that candle after SMT. Take 50% of that candle. There's your change in the state of delivery. Once you have this violation in your SMT trigger, this is where you're going to look to take your entry. Anywhere in here, you're okay. You're then going to go back to your original range. And you're going to go up 2 times standard div. Right? That's another example. Another example. Over on this high. So up on this high, you can look for your Turtle Soup trigger. So if we go to here, Friday 25th at 10, right? You're going to look for your higher time frame SMT at your higher time frame POI, right? If you were trading this high at this time, you're going to wait for price to violate that low. You're going to measure that wick. You're going to take 50% of that range. Inside of there is where you're looking to go short. Just clone this. So anywhere in here is where you're now looking for your turtle soup trigger. Anywhere in here. Into your POI. Whatever your POI is, again, break a block. To then go short, looking for your S&T lower time frame trigger in here to set your lower time frame sell. All right, you're going to go back to your initial range. You're going to measure the 5. And you're going to go out 2. All right. So today, for example, so this is with ES soup in the low. So when this violates, this is where you're going to start looking for your entries, right? Which gave you inside of here. So inside of here is where you're going to start looking for your lower time frame turtle soup to trigger you into your trade. So inside of here, you had your lower time frame triggers on your 15 seconds, right? So you've basically got your higher time frame confirmation. You've got your change in the state of delivery. You're now looking for your lower time frame turtle soup. Anyone got any questions they want to ask me? 1 minute or 15 seconds, the same principle. So you're basically going to utilize the same principles that we talk about in terms of base rules and context forming, everything else we talk about inside of here. That is where you're going to start hunting for your PDA, hunting for your context to support your trade idea, everything else we talk about in terms of red pill. So everything in terms of red pill is built on top of having your higher time frame S&T, changing the state of delivery, and then looking for 50% of the order block, looking inside of that for your lower time frame trigger. So everything else comes on after you've had this higher time frame context formed. So for example, in here, you can see how price going right back into the high of this order block. Mean threshold, London dealing range, anticipating the London dealing range to be taken out because of what ES was doing. It gives further context for what you're looking for, even if price came back and mitigated that range. And say, for example, we hadn't taken out the London high, price went through mean threshold. It's like, well, okay, it's still valid in here. Right, we're just looking for our S&T on the low to provide us in here for the context for continuation. Yeah, so you're going to go back to the original manipulation on the low, the hourly manipulation. So essentially this is manipulation on the hourly, break of structure, there's your return to. So you're trading the offset, but you're getting it's a high probability offset, and you're trading the lower time frame sell versus getting in right up on this high, which predominantly be looking for. But if you missed all of this, it gives you context for a secondary trade. So what you're going to do is you're going to go into this hourly manip, and you're going to go down to your 5 minute, and you're just going to do the extension, the X levels extension off the 5. Always 2ST. Original manipulation, 2SD. Make sense? You know, you could have utilized the same principle yesterday. This was your higher time frame POI, right? If you were tracking it yesterday, ES back into 50% of its daily range. Right, so you got your SMT up on that high, right? Looking for price to violate. So you're going to look for 50% of that range. Once that candle has been bust. Anywhere inside of, if I just clone this, is where you're going to start looking for your entry. So whether you start looking for your turtle soup trigger for your sell. So it just gives you pure confidence in what it is you're looking for, right? Because essentially what is happening is on the higher time frame, that is a change in the state of delivery on the higher time frame. That right there is your change in the state of delivery. So that SMT that you've now got on the higher time frame, this is a higher time frame, high probability change in the state of delivery, because you've got your SMT confirmation into your higher time frame POI gap fill. Right now you've got your change. This is your order block supporting price. You don't want to see price go through mean threshold. This is where you're now looking on the lower time frame for your turtle soup triggers to then take a lower time frame buy. All right, so now your objective becomes just going back through the principles of price. All right, price is now searching for liquidity, right, which would suggest, drive us into taking out these highs. So it gives you super confidence in terms of what price is more likely to be doing. Right, you've got your change in state delivery. It's now going to be searching for liquidity and inefficiencies inside of a high time frame DRs, right? X level DRs, going back through the dealing ranges. So there you have it. There's my mechanical TS model. I hope you find it valuable and you can start making consistent gains within the market utilizing it. As a thank you for watching this video until the end, I'm going to give you a promo code to gain access to Red Pill University, which is my in-depth course dubbed the PhD level course for trading Turtle Soup. If you use the discount code Friday50 in capitals, so Friday numerical 50, you will get 50% off the current price of Red Pill University. That is my thank you to you for watching this video. Until next time, trade safe. Ab Bosch.